So I think this is interesting. I'm going to focus on RUT here, but take a look at the 3-minute, 9-minute RUT chart on AbleTrend, and you see the blue bars, and you see the rising large blue dots and small blue dots. That's our stair-stepping pattern where those levels of support have moved higher each time they printed. The small dots are 3-minute, the large dots are 9-minute. That indicates that we're in some sort of a rising trend. We're also double stacked where we have both 9-minute and 3-minute support. So what's interesting about that to me is you see where the green bar is before this set of blue bars that moved higher. If you and Michael's highlighting that for you. If you move back to the left, you see how flat that whole time period was. I mean, we were in a very tight range. Really nothing going on, but we were still double stacked to the upside. Well, Michael and I have been having some discussions about taking trades, whether or not we want to take a trade, because where those green bars were printing on RUT, on SPX, and on NDX, those are all great sweet spot trade opportunities. So the signals on the AbleTrend charts, in my opinion, are some of the most solid that I've ever seen. They're the most accurate I've ever seen. What comes into play is the human interpretation, and that is a legitimate part of trading. You need to apply your own interpretation. One of the reasons that Michael, well, so let me back up a minute. Michael, as you know, in the live trading room, he took a couple of trades on NDX and the sweet spot, and he did very well. He was in those trades and he was out of them very quickly for a nice profit. And we're big fans of what we call base hits. We're not looking for home runs. We're not looking for, swinging over the fences. We're just looking for base hits. And when you have multiple base hits and you recycle your capital multiple times, it accumulates into a very nice, comfortable stream of profits from your account. But in fairness, prior to Michael taking the last rising bias trade based on that sweet spot, he was a little hesitant. And we were having a discussion about it. He was hesitant because we've been in this pattern, this rising pattern, for quite some time. And generally, once you've been in a pattern for, in our experience, roughly approaching 2 hours, it's not at all unusual to see a reversal in that pattern. Because one of the things we know with absolute certainty is that the indexes, NDX, SPX, and RUT, all cycle. They cycle higher and they cycle lower. And what we're looking for are clues that tell us which direction it may be cycling next. So in the case of NDX, Michael was kind of hesitant because we'd been in that pattern for a while. Yes, we were showing a sweet spot trade, but all of the bars leading up to him finally deciding to actually take the trade were flat. We knew there was enough room for the trade, for the index to move to take a base hit profit, a small profit. But those are the human interpretation parts of trading. And sometimes you're going to stay out because you think that maybe the strength of the move is weakening. You might stay out, and you might then, in hindsight, realize that you missed out on a trade. It would be ideal, we joke about this in the trading room, it would be ideal if we could develop an app called a hindsight trading app, but we have yet to develop that, and you just have to base your trades on everything that you see going forward. So trading is something that you can that you need to learn to adjust your emotions to, because if you get frustrated because you missed that trade, or you get frustrated because you maybe think you should have stayed in a trade a little bit longer than you did, set all of that aside. We joke a lot about it in the trading room because for us it's just fun. What we know with absolute confidence is we took a trade, we took a profit out of that trade, it was a base hit, we had our capital back, and now we are able to recycle that capital and put it into another new trade. When you see the type of pattern that you see right here in these 6 windows, the top row is the 3 9-minute chart, and the bottom row is the 5-15-minute chart. These are Able Trend charts. They're all double stacked to the upside. There's still a trend that is showing strength to the upside. Frankly, just because of our experience, we know that that trend will eventually weaken. So you can take two different approaches here. One is you can apply your knowledge and experience from having traded these trends before, and you may decide to stay out of a trade even though it looks like it's a good setup for a sweet spot trade. That's one approach. Or the other approach is you can just almost put blinders on and say, listen, if it shows a sweet spot trade, I'm going to go ahead and take the trade, and I'm not going to question the signals. And if in fact the signal then reverses and the trade moves against me, I will cover the trade and I will protect myself as I learned to do through the Profit Accelerator program offered by Options Moneymaker. So it's entirely up to you as a trader to decide which of those approaches you want to take. Neither of them is more right than the other one. Frankly, we have situations where I may sit on the sidelines and Michael will go into a trade. And we have other times where it's the reverse of that. Now, I didn't take those trades, those NDX rising bias trades, because there's another element of trading here, and it's a very realistic part of trading and something that you need to just get used to and accept. I was in a trade on RUT, and I was actually in a put trade, and the index has been moving against me. And what I've been doing is I've been focusing my attention on managing my put trade. First started by selling to open a short put against it as the index moved higher. Thought there might be an opportunity to buy to close that short put, take a profit, cost average the long put, and look for an opportunity to close that out on the next move down. That hasn't happened yet, and it's consumed a bit more of my time than I would have liked, but that's a reality of trading. If you get too many positions going at one time, you're going to get distracted and you're going to miss something. So I missed out on an opportunity to take a couple of good rising bias trades that Michael took advantage of because I was preoccupied with a particular trade I had. But that was the decision I made. I could have set that trade aside, I could have ignored it, and I could have focused on opening new positions instead. That was not the decision I made. So the bottom line here, and I think the headline, the takeaway is the same signals exist for all of us. How each of us choose to interpret them, how each of us choose to act on them, and how each of us choose to spend our time and capital on those signals versus other signals is entirely up to each of us individually as traders. We each individually need to make those decisions consciously, not just in a hope and pray type approach, but consciously we need to make those decisions on how we are going to trade and use our capital. We choose, and I know I speak for Michael when I say this, we each choose to trade our capital in as conservative a manner as possible, but we're not afraid to take action when we feel it's appropriate. And in my case, I've been taking action on my RUT position, knowing that at some point this cycle will exhaust itself, this rising cycle will exhaust itself, and we'll get into a declining cycle, and that may work to my advantage. Has not happened yet, but that doesn't mean it won't. So let me pull you over to my charts, and now I want to show you a comparison of that to my bar charts. So hang on just a second here. And you should be able to see my bar chart screen now. When I am looking at those Able Trend signals, and I'm going to focus on RUT here because that's the position that I've been focused on, I am also simultaneously monitoring a 10-day, 10-minute bar chart. Now, the reason I do so is because I've worked with bar charts for years, and I like a very simplistic but macro view of what's going on with the index. And with RUT, what I see on a 10-day, 10-minute chart is we've been trailing right along a rising line of resistance. The reason I know that's a rising line of resistance is because we've established a natural level of resistance. That was a high point right here. This was on the 1:10 p.m. bar, and the high was 11:47.69. The next bar actually had a high that was almost exactly the same, but it was not a higher high. So I'm going to just say that the bar before the current bar was a natural level of resistance. That's because the price points leading up to it and the price points so far leading away from it are lower highs. I can take that natural level of resistance and tie it back to a prior natural level of resistance, which was at 1144. It also ties back to another level of resistance at 1142, and these are price levels, not time frames. And then it ties all the way back to a natural level of resistance at 1138. So those price points decided during that trading activity that that was a stalling point for the movement higher. Will that happen here? I can't guarantee it will. I mean, right now I can see that the price is actually moving lower, but more importantly for me is I want to develop some understanding of what the potential range of movement is. So I have multiple natural levels of resistance here that are defining the angle of this rising cycle. And then I have one natural level of support down here that's defining for me where support is. Now, those of you who are following along with the AbleTrend charts, you probably just saw the sell signal come on the 3 9-minute chart on NDX. So that's the first level of weakness that we've seen indicated since this rising trend began. So that's, again, not a surprise, but it's not confirmed yet because we still have a line of support below us. So back to my bar chart here real quick. I see that there is a realistic possibility of trading back down to support. I say it's realistic because we're trading at that level of support earlier today. We've cycled higher, and there's no reason why we can't trade back down to that same level of support, which could potentially take us down around the 1137 range. It would just depend on where we might hit this level of support. If we came down dramatically, I could see us trading at support at 1136. If we meandered our way down, maybe even into tomorrow's open, we could be trading down around the 1139 range. I'm not trying to predict where we're going to trade. I don't try to do that. What I do is I monitor the charts and I'm looking for these simple telltale clues of natural levels of resistance that tie back to other natural levels of resistance or natural levels of support that tie back to others. Right now, there is nothing else that ties to support on this rising pattern. One last thing about my rising pattern, it sits completely inside of a declining pattern where we had two prior natural levels of resistance. We had two prior natural levels of support. We've moved very close to that declining resistance. We didn't get right to it, but we still might, because as I look at the AbleTrend 3 9-minute chart, we are still trading in a rising pattern. We still are stacked to the upside. So anything could happen. We could cycle back up to this level of resistance. Here's my bottom line takeaway. As I look at my charts throughout each day, and I'm looking at the AbleTrend 3 9 and 5-15 charts, looking for clues about what trades I want to take. I'm also looking for clues about where the weakness may be starting to develop. The bar chart gives me some of that clue as to where that weakness might develop when we're forming natural levels of resistance or support. In this case, it's a natural level of resistance, and since we formed that high at 1147.69, we're now trading down to 1146.26. So will we continue going lower? I don't know. The further we get, or the closer we get to this declining level of resistance where we have a convergence of rising resistance and declining resistance, the more likely it is that we're going to see a movement lower. And also today is one of those days where there's going to be some news. There's going to be Fed meeting minutes, and the news tends to focus on the drama and emotion of the market, and that can realistically drive price. This currently that I see on my bar chart, this pattern would not surprise me to see us move lower. I'm also now just starting to see on the Able Trend RUT 3-minute, 9-minute, that 3-minute support has quit printing. That could potentially be another indication of weakness, as well as NDX is starting to show a series of 3-minute resistance levels. And we have to wait one more bar, wait for this current bar to close to see whether or not we continue to print 9-minute support. So let's just jump back real quick to Michael's Able Trend charts. Michael, can you put up, there you go. And you'll see what I'm talking about. If you look at the 3-9 on NDX, we have a sell signal that came on. That's the big red dot on the bar. And then we have 2 bars after it so far. But we had 9-minute support printing underneath that sell signal. So if we want to take a position to go short, we want to be, and we choose to be conservative. You can be as aggressive as you want to be, but if we want to be conservative, then what we want to do is to wait for confirmation that 9-minute support has quit printing. Also, as Michael was just pointing at, the 515, and this is one of the reasons why we track both time periods, the 515 chart is showing that we are trading right now right at 5-minute support. So those are the patterns that we look at. Those are the patterns that I specifically look at. And if you get familiar with those patterns and feel confident in reading the time periods on Able Trend, the different time periods, and interpreting bar charts as a correlation to those patterns, you can do extremely well with your trading. So last point I want to emphasize, we frequently talk about base hits, taking small profits out of each trade because you never know when it's going to reverse. So why not grab the profit you have? You know, the profit that you've taken is a profit that can't be taken away from you. The profit that you are waiting for is a profit that can be denied you. So it's good to take profits and base hits. $400 a day on an average. If you can average $400 a day, and we're not talking about making 400 every single day, we're talking about an average of 400. For example, the last 2 days, I've averaged about $1,300 a day. So if you can average $400 a day off of recycled capital, you typically are going to be putting at risk somewhere between $5,000 to $10,000 at a time. So you don't need a $100,000 or $500,000 account to trade successfully. You don't even have to day trade. We show you how not to day trade, but following the same signals. We teach that in our Profit Accelerator course. But if you average $400 a day, you can make almost $100,000 a year, which by any measurement, in my opinion, is still a pretty healthy income. And it's a great income if you want to be your own boss, if you want to establish your own business as a trader. This is a business that you can establish without any clients necessary, without any sales, without any marketing, without any inventory, without any warehousing, without any overhead of fixtures and furniture and all the usual things that are associated with having a small business. This is a great small business to have, and I just wanted to share with you some of the more detailed views that we take in the live trading room. Michael, myself, Aaron, and Allison, the team at Options Moneymaker, who host the live trading room, wanted to share some of the details and how we view them. Every signal does not play out into a profitable trade, and I want to be very clear about that. Not every signal will play out to a profitable trade, but every signal is tradable, and every trade can be adjusted or managed, or sometimes we let a trade go to a loss. That's okay too. because when we evaluate our performance at the end of a week or at the end of a month, as long as we are net positive, it doesn't matter how many trades you traded. It doesn't matter how many wins you had or how many losses you had. All that matters is the absolute dollars that you can take out of your account and go spend. That's really the only measurement. A lot of traders will get tied down, bogged down in measuring incredible amounts of detail in their trades, and they are extremely proficient at being analytical, but they're not very efficient at trading and generating profits. I've had multiple conversations with traders before, and they'll show me volumes and volumes of stats that they have, including back testing and then trade by trade, every detail of every single leg and every single movement, and trade journals that they keep. And when I ask them very simply, well, how much money did you make in the last 30 days? Or how much money did you make in the last 60 days? The vast majority of those people with that level of detail are not actually making money. So what we're trying to focus on here at Options Moneymaker in our Profit Builder program and our Profit Accelerator program that is backed up by the Live Trading Room, what we're trying to focus on is what can we actually achieve in the way of profits on a daily, weekly, monthly basis. We had an excellent June, and so that gives us some latitude to maybe give back a little bit of it if we have some challenging trades. We've had an excellent first 6 months of 2016, so we don't want to get so bogged down with an individual trade that we lose our mind and lose sight of the fact that it's the big picture view. And if you can take a 12-month look back on any of your trading activity and you are net positive, then you have a successful business. So that's my update for today and my analysis. I hope this is helpful to you. We certainly appreciate everybody in the Live Trading Room. Those of you who are regular subscribers, thank you for being here. We love trading with you every day. Those of you who maybe are just trying us out for a few days, we hope you're learning something. Hope maybe you've been able to follow along with some of our trades and make some money. And if you're listening to this and you haven't checked us out, you might want to check us out at optionsmoneymaker.com.